are two things that we can be sure of in life: death and paying taxes. And yes, that is where we are starting tonight at 10. Thanks for being here with us. I'm Tatum Gwen. I gotta tell you, it is so good to be back with you. Okay, so taxes. There's a proposal from the Biden administration and the Department of Treasury that's gaining traction and also raising eyebrows. On the surface, it reads that the government would track any bank account valued over $600. Jonathan Polasek spoke with economist Dr. Ray Perryman, who says the goal is to make things a little harder on anyone trying to avoid paying their taxes.
There were concerns over this new proposal of tax compliance, that people's individual transactions would be monitored. Well, that's not actually the case. The proposal would really require banks to monitor and report just the inflows and outflows of money, just the amounts from other accounts with over $600, meaning that you would not see what the money was spent on or where it came from. Really, it's to help spot anomalies in funds going in and out. Taxes, they help pay for a lot of needs in our lives, including roads and education.
We all recognize that there's a certain social contract in the country. We want education, we want roads, we want national defense, we want homeland security. There are things we want that cost money, and so the idea is to get people to pay the amount that is reasonable and fair and appropriate for them to pay.
However, there's currently a tax gap of about $160 billion, which is why the White House is looking for ways to improve tax compliance.
The goal there is to improve tax compliance and to try to get more people to pay their taxes. And that's certainly a laudable goal. We need to do that. But the vast majority of people who are using some kind of financial chicanery to cheat on their taxes are not running the money through a bank. That's not a very smart thing to do.
The proposal would look at money coming in and out of accounts valued over $600.
The specific proposal is just to look at the inflows and outflows. It's not to track the actual where the money came from and where the money goes. It's not aimed at that as far as the actual proposal goes.
Meaning the goal isn't to look at what the money is being spent on, but rather how much to look for anomalies.
The intention, the expectation, not that they would see every transaction and see, how much you spent at the grocery store, how much, if you use your debit card at a gas station. It's not trying to do that sort of thing. It's just trying to look at the numbers and look for anomalies.
Now, Ray Perryman doesn't see this as a real good idea. He believes that it makes things more difficult for banks with a massive increase in reporting, instead believing that having more IRS auditors and examiners looking for discrepancies with the system in place, looking for anomalies. Tatum, back to you.